About Yum Brands, as we're on this consumer theme, and Yum is cutting back on its full-year profit outlook after reporting some disappointing third-quarter results from its main market of China and also India. Operations were a bit soft as well. It posted an overall profit for the quarter, but same-store sales in China missed analysts' forecasts. Yum shares dropping some 18%, really getting crushed after those numbers hit the tape. Let's talk more about Yum, and joining us from Pensacola, Florida, Ross Givens, chief market analyst at Wealth Empire. And Ross, after 5 straight quarters of declining sales, a +2 in the column isn't bad. I know it's below market expectations, but it's something at least.
Yeah, and thanks for having me on. Yum Brands is really, the stock got crushed just because it's been too high, right? I mean, we got a stock that has been in a 3-year period of stagnant revenues, stagnant profits, and for some reason they're trying to command a 20 times forward earning multiple. It's just not justified. So anything shy of breaking analyst expectations was going to lead to a crash, and we're finally getting this stock revalued to something a little more sensible.
Yeah, well, is it, being priced at a sensible valuation right now? We're 18% down, aren't we, in after hours? Does that seem more likely given the slowdown continuing in its bread, butter, basket market of China right now?
Yeah, I mean, I definitely think it's a more reasonable price after the pullback. What's happened, though, everyone seems to kind of be using China as a scapegoat right now, right? Your business isn't doing well, sales are weak, profits are down, blame China. Everyone loves to hate China right now. But look, they've got some smart people at this company. They should have seen the writing on the wall, and you can't bank, 3 fast food chains on growth in China and command those kind of multiples. It's just unreasonable. So I think today's price is going to more accurately reflect what this company's worth. It's probably painful for current Yum shareholders, but it's going to get it down to a more reasonable number.
Ross, 54% of their sales come from China. How are their other markets doing? How's the U.S. doing for them?
U.S. was up, but again, nothing too extreme. India's down, and the India market, they were expected to lose market share and lose money there, and they just lost more than expected. I think the U.S. market grew something in the neighborhood of 2%, if I'm remembering the numbers right. It's just not a high growth company. Especially in the United States, they've expanded, I wouldn't say to their limits, but close to it. And so that's why they're really banking on China for that growth.
Well, then why don't they just spin off its China business like Corvex has told them to do?
Yeah, and I think that's actually a pretty good idea. That way you can separate the China operations from the U.S., and we don't have the volatility that we're going to experience just because we can't predict China anywhere near as well as we can the U.S. They're known to manipulate their currency, their economy, their stock market is much more volatile than ours. We saw their stock market gain something like 150% in the last 18 months and then fall 50%. It's just not as mature of a market. And when you're trying to base your expectations, your numbers on sort of what I'd call an immature market and a little bit of a weaker economy, it doesn't make a whole lot of sense. So spin the thing off, let people invest in the China section if they want, but also give, U.S. and European investors a chance to only hold what you want.
All right, Ross, thank you so much. That does it for